My wife, 25, and I, 23, are closing on a house in 20 days. Congratulations, Colton. We have a high household income of $135,000 and save 22% of our income.
Boom shakalaka.
We want to upgrade in 4 to 7 years when the kids come. Do we pay down the 7% mortgage or do we invest?
So one, let me just give, this was Colton, right?
Yeah.
Let me just give you guys some attaboys because that's amazing to be 25, 23 years old, to be buying your first house, making $135,000, saving 22%. That, like all across the board, that just screams to me financial mutant. So good job. Like you have figured this out earlier than most folks. I mean, most folks don't start taking their finances seriously until what? Early 30s. First time home purchasers, I think, is on average is at 36 right now, something like that. So you guys are well ahead of the curve, but you are facing a unique thing because home prices have increased over the past couple of years and interest rates have also increased. So you're looking at, it sounds like, a 7% mortgage. And I imagine in your mind, you're trying to think, okay, is that 7%? If I'm following the financial order of operations, Brian, can you hold the thing up? If I'm following the FOO and I'm doing the stuff I'm supposed to be doing, does a 7% mortgage count as high interest debt? Is that something that I should be aggressive in paying off? Or at 25 and 23 years old, have I gone to moneyguy.com/resources and checked out the wealth multiplier? And I know just how powerful every one of my dollars can be if I put it to work for me, as opposed to satisfying that 7% debt. I imagine there's some tension trying to figure out which one makes the most sense, which one should I do? I know I have my thought, but do you want to say what you recommend?
Yeah, I mean, I don't mind sharing. Mortgage debt is one of those unique debts that, look, interest rates start settling down, you're going to be able to refinance. That's why I don't immediately classify a 7% mortgage as high interest debt, is because, I mean, by the way, I resemble this. I mean, one of my first house that I ever bought, my mortgage rate was 6 3/4 on it. But I was still funding because I'm old enough that I was even investing right before the Roth came on the scene. But yes, I was still funding Roth IRAs with that. So, I have a no hypocrite policy, and that's why I want to make sure that the financial order of operations syncs with what you're doing in your journey to build financial independence and wealth. And that's why I would focus on doing the financial order of operations. Don't treat that 7% as it's necessarily a step 3, even though I know you hear 7%, but realize potentially, now most people don't itemize deductions on that anymore, but still it's one of those things where I think with the refinance opportunity, I wouldn't classify it there. That's my easiest takeaway on that.
I agree. And then I love that you're already kind of beginning with the end in mind. You said that here in the next 4 to 7 years, we're probably going to upgrade. We're going to think about once kids come, we'll maybe move out of this house. Now, in full disclosure, I really like the idea of that being closer to the 7 than the 4, because we always say that when it comes to buying a home, you want to make sure it's a long-term decision. You want to make sure you can see yourself there for at least 5 to 7 years, because there's no guarantee that 4 years from now, the housing market will have agreed with you and everything would have gone the way and it would have gone up in value. But if you can stretch out to 7 years, I think you save yourself from a little bit of that risk. But I would even encourage you, as you think about the way that you're accumulating and the way you're building, having a goal to be able to know, okay, when we upgrade, when we move to that second home, when we decide to do that, we know we've got to come up with a 20% down payment because it's an upgrade home. What decisions are we even going to begin making today after we close on this home so that we're prepared for that 20% payment 7 years in the future? So I love that you're even thinking through that and going down that line of thought.
I'll give one other angle, just as the older sentimental person here, who's now kids are about to leave the house. Is that because I see it's 4 to 7 years potentially, and I don't know if that's when they're starting to have kids or that's when you have enough kids that you need to upgrade. But I do want to encourage financial mutants. Sometimes we try to control everything in life, so we put off having kids until we have everything accounted for. As now a 50-plus-year-old financial mutant, I would tell you I kind of wish, because we were married 4 to 5 years before we had our first child. And I kind of look back and I go, we probably could have stacked another child in if I would have gotten to work sooner on that part of it. So I just share that with you just because kids, I know they're hard. Now, I'm not taking away from the messy middle because Bo's in the messy middle right now, and I see all of his. It's kind of entertaining to watch some of it. I shouldn't say that out loud.
No, it is.
But it's but you do get to a point where your kids get older, and you're gonna be like, man, should we have stopped at 1, 2, 3? Just give yourself enough time to where, because the time goes quick. I will just say that. And for our second child, we found out it was and this sounds horrible to say out loud. I was like, why did it take us until geriatric pregnancy?
Oh, yeah.
They drop that bomb on you, and you're like, what? And so just realize this stuff, that's just life advice. It's not financial. It's more of just sentimental 50-something-year-old thinking about children.